Atul, Felipe, what inspired you guys to create KADAK Capital Partners Funds, and what problem were you trying to solve in the marketplace?
Well, KADAK, um, we have a we have a basic issue with the demand of energy, which is phenomenal and has been growing tremendously. Um, and then we have Pete, the not just energy, but then you have the real estate aspects. And what we've found that KADAK can do, and the concept behind it, is to ensure that we have the infrastructure component that is a long-term play on value and and appreciation, while the real estate is a long-term as well, but a short-term uh, cash flow component for the investors. The inherent issue in very simple, straight language is that the infrastructure returns come in the third year and beyond. And most investors aren't willing to wait for that period of time to get the returns because in this competitive market, they're able to get returns right away, absolutely immediately. And so, with the real estate combination, we are able to provide them immediate cash flow from day one. And we have an existing 1,000 megawatt project on the energy side that can be invested on from day one. So we're not waiting for capital to be deployed. We can deploy it into real estate and we can deploy it into the energy project. So we have that huge advantage, and that solves a return problem for the investor. It also solves a return problem in ensuring that our IRR is maintained and grows over a period of time and doesn't have a 2 year hiatus for the investor.
Got it. And um, how have how have your backgrounds complemented each other in the creation of KADAK Capital Partners Funds?
I let Felipe go. I mean, he's just phenomenal at expressing the complementary nature of our
Yeah.
partnership. He is phenomenal on the real estate side and analyzing it. He has had extensive experience with funds as well and fund management. I think that will become an important aspect for investors. And with that, I will let Felipe go and expand on it. And he's just a pleasure to work with, I tell you. I mean, I don't have to ask for much, and I get more than I ever asked for. And that's what investors want anyway.
You too, kind of tool. Well, I appreciate that. And thank you, Pete, by the way, for having us. It's an honor to be here speaking with you. And I hope the audience enjoys this conversation and it's fruitful to them. But it's a great question. Atul is the CEO and founder of KADAK Capital Partners Funds, and he invited me to bring in on board to be the chief acquisition officers for the U.S. multifamily side of things, and we complement each other very well. Atul has done an incredible job uh, being the architect of this platform. As he mentioned, we have a very unique position in the marketplace. We have two sleeves working simultaneous. One is the growth engine, which is the high global demand for renewable energy, and he's got some very special curated relationships in that space, which makes it very unique and very financeable on a infrastructure play. And I bring to the table the real estate operation side of things. I bring a certain unique operations expertise in that asset class, and we are very surgical on how we approach that strategy for our investors. And the multifamily side of things is where we bring in the stability and the cash flow that Atul was mentioning about to our investors. But yeah, we just complement each other. It's been an honor to be part of his team, and I'm just here to support him and acquire real assets that actually perform for our investors and our fund.
Excellent. That makes sense, Felipe. Switching over to you, Atul. Why was KADAK Capital Partners structured as an open-ended fund? What advantage has that given to investors over the traditional close-ended fund?
Um, that's a really good question, Pete. And again, thank you for having us. It's just an absolute pleasure. And I love your open ended questions, by the way. It gives us so much leeway. I just love it. Uh, so, the open ended fund does two things. As you're aware, that we've mentioned, the infrastructure projects as well as real estate are a long duration play. They're a long duration play on retention of wealth and the growth of wealth. And if at any point of the time that we hold the asset, if you're forced to get rid of it because we have a closed-ended fund, uh, we lose the upside to the investor. And even though we have a close ended for the investor, so every investor wants some kind of a return in a specific period of time, we may recapitalize or as an ability to return value to the investor, to return capital to the investor, and to ensure that their investment pays off. We might have to hold it a tad bit longer to ensure that we come out on the positive end of things as well. So both for the investor and for the fund itself, it is it is valuable for it to be open ended. The other aspect of open ended is that we are in a continuous race cycle. When we are in a continuous race cycle, for the investor, it's great because we are able to return liquidity to them while ensuring that the distributions continue. And that is a huge advantage because as we return liquidity, our IRR goes up, our returns go up for the investor, and we are able to ensure that we are able to capitalize on the appreciation that's already there, and then we move forward. We move forward from there.
Got it. Makes sense. Felipe, could you walk us through the investment process at KADAK Capital Partners funds that drives how you guys allocate across real estate and energy?
Yeah, yeah, absolutely. So it's a large platform with real assets that we are building. We strategically allocated 2/3 of the fund for the capital, the equity, to be deployed for renewable energy projects. As Atul mentioned, we are starting out with 1,000 megawatt plant, and we have plans to go up to 6,000. And then on the multifamily side of things, 1/3 of the equity raised is being deployed through U.S. multifamily Class A and Class B assets in 8 specific markets that we have surgically designed to be in because we see the upside. The U.S. multifamily asset class has been very rocky since 2024, and rent growth has been historically 0.2% for is the forecast for this year. So there's a lot of operators that are hurting and don't have the capital stack formatted right, and there's a lot of financial debt that wasn't structured correctly. So you've seen a lot of syndicators go underwater. So we believe we are very uniquely positioned that we can take advantage of not of the operators, but take advantage of the market, and we can really uh, go after the right assets that would perform how we tended to perform on a 10-year hold is what we are projecting for the fund.
Got it. And Atul, what makes the energy infrastructure in India, that part of the portfolio, a compelling area to invest today?
A great question. The energy portfolio allows us a couple things. One is it's a backed MOU with single window clearance, which gives us um, clearance on licensing, assets, land, permitting for the project, etc. The other thing that we have is that we have a 1 year head start in the acquisition of the project from any other funds. So what that does for us and for the investors is it's an investment ready project. We don't have to wait to deploy capital. So that is phenomenal. So we have a 18 to 24 month implementation cycle, and most other energy projects could be a longer cycle. The size of energy project that we have, and that's a huge advantage. The other advantage is that it is we have guaranteed revenue, and then um, uh, we have insurance instruments that we will be using to ensure that the liability to the investor, the risk to the investor is reduced or eliminated at source. So they don't have that liability of revenue not coming in over a period of time, or some sort of political risk and those kind of things. So we try and mitigate all of those at an insurance level, which in a way you could convert it to say it's at a sovereign level, because it's backed by the government. As far as the electricity uptake is concerned, we have guaranteed uptake of 100% of the output, and that is phenomenal. We also have the ability to expand into the growth of the power need of the day, not just because of AI, but population growth, manufacturing, bleed that is coming from China to India, as well as the general growth of manufacturing and demand globally.
Yeah, not only that, and let me add and brag on Atul a little bit. These relationships he has in place didn't happen overnight. He's been building that within decades. He didn't get into his background a whole lot, but he's done a lot in the area. And he's got very specific and strategic government relationships that really makes this project shovel ready per se, as he mentioned.
Thanks for adding that. I totally forgot. I took it for granted.
Got it. And Felipe, on the U.S. real estate side, what attracted you guys to stabilized Class Alpha and Class Bravo properties?
We really see that that's where the return and the risk mitigation is for our investors. We think it balances our aggressive growth engine, which is the renewable energy. It balances it beautifully, right? Not only on the cash flow and the stability side of things, but also our tax advantages and our cost segregation depreciation that we get to write off and pass it along to our investors. And we just feel, especially in these 8 markets and sub markets that we are targeting, we have a very rigid and disciplined underwriting that we are really buying assets that we know are going to perform on a long-term basis, not on short-term. We're not chasing, rent growth that is unrealistic. We're staying very conservative and very realist to what's happening in the market. So we feel very confident on those asset classes in these specific markets that we feel pretty positive about it.
Yeah, the other great thing about Class A and B plus properties is your attrition level is really low, and so your occupancy levels, are higher, and then that's further stabilizes the return for the investor.
Yeah, and to touch on that a little bit, we are, targeting a certain size of asset. Uh, we do 200 plus units. We have a very specific goal to acquire between 21 to 24 assets throughout the fund, in which it would put us right around 6,000 to 6,500 doors under the portfolio. So we have a very methodical process on how we do that, and we would love to expand and really show what our buy box is. To anyone that's interested, we'd love to expand that and let you guys know why and exactly what we are buying.
Yeah,
Absolutely.
yeah. Well, let me ask that. Like, what is your buy box?
So we are in 8 markets. We are very optimistic in certain markets: Texas, in Florida, Georgia, Arizona, North Carolina, Florida, Alabama. And our portfolio construction is allocated to a certain allocation to certain markets. Texas and Florida being the highest ones. So we are looking for vintage of 1990 or newer. We want stable assets, high occupancy, moderate growth, not on year 1 or 2, but later down the line, where we see that the rental demand is there, the supply is not quite meeting the demand. And our purchase price is anywhere between 25 million to 150 million per asset, per building. And yeah, so very light value add. Like I said, we're looking to buy stable assets that are cash flowing from day one. So if we are going to get into a value add project, it would be on a case by case, very selective, and more on the Class B side of things on certain markets that would uh, really deliver on the yield, on the return. But this is an institutional grade portfolio construction and allocation that we have designed. So hopefully that kind of answers your questions a little bit.
Yeah, the one other thing I'd add is that when we're underwriting, we discussed it a lot. We're underwriting to a higher DSCR. So just for people, it's debt service ratios, so that we we ensure that we not only are able to service the debt comfortably, but we are able to provide the return to the investors. So the cash flow to the investors is our critical aspect from day one. And the DSCR underwriting criteria that we have ensures that that is deliverable from day one. It also gives us headroom if there are fluctuations in the market. And so we are able to, navigate that without having to get into a fire sale scenario or into a scenario where we go back to the investor for additional capital.
And to touch on that a little bit, I think a unique point from our fund on an operation standpoint is we are going to be very liquid. So we are not going to be leveraging the finance or agency loans on the front side of things. We'll be able to acquire assets uh, in a very rapid pace without much red tape, and we'll recapitalize obviously later on after we have some seasoning and the time is right. But I think that puts us in a very unique position and a big purchasing power, especially on operators that might be heading towards trouble, not because it's not a performing asset, but because, like I mentioned earlier, maybe their capital stack is not how it was supposed to be designed for a longer hold period, and that uh, might be a floating rate or might be a short-term construction loan that they weren't planning on extend for so long. So that's why we are heading towards that direction.
Okay, that makes sense. And Atul, could you speak to how the renewable energy products or projects complement the real estate portfolio? How those improve the risk-adjusted returns of the fund?
Absolutely. So We have real estate, which is actually similar to, I mean, the energy project, which is also real estate, except it has infrastructure on it. And then it has a delayed return initially. But what we have architected into the power purchase agreements and how we would negotiate the agreements are an escalation rate beyond your consumer price index, CPI, inflation, etc., so that we ensure that we have escalation of rate, escalation of NOI, and we are able to, over a period of time, return alpha to the investors or a greater return to the investors. Over a period of time, over a 5 to 7 year period, you're going to see greater revenue escalations because we have that on a yearly basis. And that gives back to the bottom line and contributes towards the IRR in a pretty dramatic fashion, positively for the investor.
Got it. And what do you guys look for or prioritize when taking on another business partner or employee to join the firm?
Um, I think the key thing is alignment, you know, and I've spoken to many, I mean, just Felipe and a whole bunch of others. And sometimes the alignment is there, but as you dig deeper, then the alignment is not there. And for example, for us, I was speaking to one of the other people that we wanted to get on, but the alignment was not there just because of timing and what we need to do. But that alignment might come a year down the road or 2 years down the road. And so we leave that option open. And what we have done within the fund is to ensure that where there is not immediate alignment, we are able to work with them and partner with them. So we have allocated, for example, 10% of the fund to partner with other competing funds, possibly, but complementary. So in the sense that they may be in an asset class that is really profitable, that they have in their portfolio that we can participate in, and we might be able to do that through that mechanism. And so we've allowed that flexibility to partner with others. And then when we bring on people, we have to make sure there's alignment from for their own goals first, because without that, there's no long term alignment. And we need people who are going to be there for the long term. Our asset class is a 7, 10 year hold. We need to make sure people are going to be there for that whole period of time. And if they're not, then it's not a good fit, right? So they might have other initiatives or their own ambitions, and those are all good. And maybe we can support them in some other way, but not directly into the fund itself.
Yeah, that's a great question. I couldn't have said it better. I'm a big believer of alignment before assignment, and I think the executive team and the whole team need to have and share the same core values, that we have certain traits that we appreciate, that we look for, and that we want to be around. And obviously, we want to make sure that we get along with our partners. That's always a plus. You got to have fun while you're doing business, because why not? Life is too short not to be having fun and have the people that you like around. And not only that, I always look as I'm usually good at math, but I'm gonna say that I look for partners that 1 plus 1 doesn't equal 2, but it equals 5 or equals 10. It's somebody that has that exponential contribution and value add to the team, either be for their attributes or their skill set or their technical knowledge in that specific industry. So I think that's what we look for at the end of the day, is also that right team member that's going to fill in the gaps where we are lacking. Atul and I are imperfect. We have many weaknesses, so we try to mitigate that as much as possible by bringing in the right and correct team members in place.
I have a weakness, Felipe. What the hell?
Well, I'll send a list after the call. Okay.
Awesome, awesome. um, yeah, it's just putting the right team together that, and also one of the things that's really important, you want someone who'll who'll kind of run with it, but you don't have to monitor their progress. It's going to get done, and it'll get done in the best way possible. And the initiative is there, and you may not know everything, or but you're able to find the solution. You're able to dig in and get it done, and that's the most important.
Got it. And Felipe, what lessons from your career have been most helpful in co-founding KADAK Capital Partners funds with Atul?
Man, there's so many. I don't even know where to begin. You know, I like to say that there's no algorithm for experience. And, I've been in business, I'm fairly young, but I've been in business for 18 plus years in real estate. Uh, uh, and, navigating each market cycle. I've been through multiple market cycles now. Uh, there's so many lessons that you learn as you advance. No matter what level you are at, you're going to have different set of challenges and adversity that present in certain ways. And it excites me. I embrace adversity. I love challenges. So I'm always looking to improve. I like to say I'm a student of the game, and I try to learn from everybody, from all different businesses, all different industries, different people that I can morph into and mold into what we are doing and really get the best results out of it. So on an entrepreneurial level, I'm a big believer that it's kind of like how Atul mentioned a little bit earlier, right? I don't need to be the smartest person in the room or have all the answers, as long as I know how to get the answers that I need and surround myself with people that are smarter than me, which I think that's the whole key. Really is using not only other people's talent, but really everything that they can bring to the table. So it's always exciting to build something new, to build a product that is very unique, a platform that, to my knowledge, doesn't exist anywhere. And I think that puts us in a very unique place that we can really do some good and deliver to our investors.
Absolutely. And just picking up on that and going back to the previous question that you asked about building out the team, I think it's really important that as we build out, that we look for people who are better than us. Maybe they have greater knowledge, they have greater experience. I mean, we want to be able to grow that team where we are not afraid to learn from each other, and at the same time, we contribute positively. The other aspect is to make sure that everyone has the latitude to do what they need to do, and offense is not taken unnecessarily. So, yeah.
Got it. And Atul, how do you guys approach the sourcing process to find opportunities that may not be broadly available to the whole market?
Um, how do we approach it?
Yeah, how do you approach sourcing?
Um, one project at a time, very carefully, one asset at a time. Uh, you know, uh, a lot of assets might look good on the outside, but if you just jump at them, you can jump into you know a mine of a lot of problems. And so you really need to look at each asset individually. You need to deep dive into it. You need to do your due diligence, and have a process for that. So you're looking at everything just from basic underwriting all the way through going and inspecting the property, making sure the financials work, making sure the returns are there, and making sure that you have upside in the long term. And so, if you're able to do all of that without rushing into it, I think we'll do great. And then when you have the capital, like Felipe mentioned earlier, and you have the cash flow and the bandwidth, you can make better decisions. You're not forced into a situation that you don't want to get into. And I think that's what the investors need in the long term, is to make sure that they have a team behind them that's investing with the best practices and is well balanced in all of their decisions.
Yeah, to piggyback on that a little bit, on the multifamily side of things, deal flow is one of my strong attributes. Uh, we've been able to really use AI and state of the art technology to not only source our deals through our own process, but I think relationships are very important. Not only my incredible charm and persuasiveness, but we really are in for the relationship aspect of things, right? It's not just a transaction. There
Yeah,
is another person, another human being in front of you.
yeah,
And I think really being able to source that and form those broker and direct to seller off market relationships before a piece of property is even listed for sale. They already know what we do, exactly how we perform. I think having that is definitely an edge that we have, that we can get in front of a lot of doors that other people don't even know are open. So I think that's one of the key things that we bring to the table.
yeah. No, see, that's why I like Philip here, right? He always puts a smile on my face. He says things I don't say.
Good.
Yeah, absolutely. And Felipe, how do you guys define success at KADAK Capital Partners Funds beyond investment returns? Um,
Absolutely, that's a fantastic question, and I'm glad you said beyond that, right? Because I think everybody has their own definition of success, either be a sizable bank account or this or that. I measure success very simple: is am I uh, living to my full purpose that I put on this earth to do? Am I being am I fulfilling my purpose? Am I helping others? Am I being a light in the dark room? Am I enjoying what I'm doing with whom I'm doing? So I think all of that at the end of the day defines success for me. I don't think it's a value or a dollar amount. I think really it's just being the best you can be. Always be improving. Always be making whatever room you walk into it, leave it better than how you found it. And I think at the end of the day, if you're doing that with the people that you love, I think that's what success really is.
Yeah, totally agree. Um, there's other aspects of success too, right? Other than, like you said, returns to the investor. It's what are we doing, and how would it help society at a large? Can we actually, as we grow, make a difference? And some of the things that we have allocated in the fund is a certain percentage of the GP profits to be established, and to without effect to the LPs, to make sure that we do some good for the society, charity work, research, things like that, so that we make a larger impact other than just what we do on a daily basis.
Yeah, yeah, and I would say having excellence in everything we do matters. It's not really what we do, but it's how we do. Right? We're gonna provide housing for families. We're gonna provide a return and a risk adjust for our investors, and we're gonna produce power for the world that needs it. There's big demand, right?
Right.
So I think it's really operating as best as we can in every single thing that we do. Because, like I said, it's not what we do, it's how we do it, and we want to do it with excellence.
Yeah. Now you mentioned Felipe just mentioned power to the world, right? And in our in our power project, one of the largest aspects of it, that where we can make an impact in society is displaced workers that are going to come during the build phase, during the construction phase of the project. And they have children and that also get displaced. So one of the things that we have planned to do is to make sure that we provide them decent housing so they're comfortable during that whole process. And I never mention it because investors don't want to know that you're doing social work that takes away from the return, but we're doing it because it actually enhances the return, right? Um, and not just from a project perspective because they have decent housing, they're fresh to come in on a daily basis and perform to their max, but we're also ensuring that we get their children into a school or education to their children and some sort of daycare for their children so that they can concentrate on the work and we have the next generation that is going to be better off than they are today. And so that is one of the social aspects that don't really affect the IRR negatively, but enhances the social impact that we can have in society.
Got it. And Felipe, from your perspective, what's been some of the most rewarding things about building an investment fund from the ground up?
You wouldn't believe how much work it is. So just seeing what you're able to do in a short period of time, I think we all overestimate what we can do in 1 year, and we underestimate what we can do in 10 years, right? So just seeing what you can build and the different lives that you can really change on with everybody that you do business with. I think that's very rewarding itself. And not only that, we are investing into hard, real assets, right? It's tangible. You can see it built from the ground up. And you can look back and you can say, hey, I contributed to that. That's my mark, that's my contribution. So I think it's very rewarding that way to see not only the actual projects come to fruition, but getting that reward of what you build is making a difference.
Absolutely.
Got it. And Atul, what trends are you seeing that might drive global infrastructure over the next decade?
Is this the general demand? I mean, you have a huge demand for uh, power. You have not just power, but grid connectivity. AI is the big player right now. As we go along, it could be other aspects, but I think AI is going to drive it. Manufacturing is going to drive it, and population growth. I mean, you have population growth in, say, India. You have AI expansion in the US. You have the huge power needs. And if you're going to compete with China and other countries in the world, I mean, we need power here. We need power in India. So for our fund itself, it's a phenomenal opportunity. For the investors, it's a great opportunity, and for the world at large, because power is going to be a driver. Elon is going to, space to get power and get, advantage over his competitors, and he's positioned to do that. So likewise over here, power is going to grow, and we'll have that opportunity over here in spades.
Got it. And Felipe, from your perspective, what trends are you seeing that might drive the U.S. multifamily real estate market over the next decade?
Yeah, no, absolutely. That's a great question. I kind of touched upon some of the things we are picking up and seeing on earlier. Some of those are, a lot of markets did not uh, obtain their initial projections on rate growth. They suffer on the NOI. I think it's got to do a lot with affordability, plus the war that we have and everything else, interest rate environment not being very favorable. So I see us positioning ourselves to be able to really come out on top. I think that this year and at the beginning of the year, 2027, we are still gonna not see as much rent growth as we would like to see. But I think towards the second quarter and on in 2027, we're going to start seeing a little bit of an increase. I think the demand and the supply, it's still not quite there. Even with the market dipping a little bit, we are still going to be in demand for housing. Even in the markets that we are in, even looking at all the new builds that are coming into the market, they are still going to have a shortage of housing. So I see that uh, uh, definitely the asset class improving, and that's why we want to be in a position to find those opportunistic deals and assets that we can get in now, so we can wait it out and really come out on top by the time that it's time for our exit.
Got it. And Atul, what milestones are you looking forward to the most for KADAK Capital Partners funds as it continues to grow?
We have set up milestones. You're talking specifically about anything you have in mind. You want to clarify a little bit on that? What kind of milestones, or what kind of milestones are you looking at? Because we could talk about milestones for the power project. We can talk about milestones of how we want to expand on multifamily side. We can talk about other generic milestones that are outside of those two.
Yeah, I was curious about milestones for the general partner itself.
For the general partner itself, um, I think personal growth is great. And for the general partner, obviously, we want to make sure that we maximize returns for the investor, and we provide it in an environment that is safe. We grow our general partner funding for the limited partnership as well. So it grows from 1.8 to 5 and 10 billion, and that is in line with some of our energy project vision for the energy projects, vision for multifamily to grow that. And a multifamily needs to grow in lockstep in barrel in with the energy, because the multifamily supports the cash flow for the investor in the initial infrastructure stage. So that is going to be a critical aspect. And so for the general partnership, I think is to make sure that it is stable, it is growing exponentially. At the same time, we're ensuring that the investments are safe and well managed.
Got it. And Felipe, what legacy do you hope that KADAK Capital Partners funds leaves for its investors and the communities that it serves?
That's a great question, Pete. I think legacy is very important. Um, you know, I don't think legacy is necessarily for me or for us. I think legacy is going to be on the generations that are coming behind us. And I kind of said it a little bit earlier, right? We want to do everything that we can with excellence. It's not what we do, it's how we do it. So at the end of the day, we just want to have a platform that's reliable to our projects. It delivers not only to our investors but our projects and to the housing that we're going to provide. I think one of the biggest factors of this fund being successful is not only the access and the timing that we have it on our side, but it's also the execution. It's complex. There's a lot of moving parts. There's different countries involved. We're not just dependent on one interest rate climate and one asset class. It's a combination of things that they co-balance, they correlate to one another. So, at the end of the day, it's just living it better than how we found it. And on a fund level, I think we can scale that and we can deliver a volume.